earlier, I have Marcus Carter as our special guest. Today, we're going to talk about how to manage the fund control process. But before I introduce Marcus, just want to thank everyone that has logged on today's webinar. For those that may have missed this webinar or want to go back and listen to it, we will be posting the webinar on the Talamar Financial YouTube site. We post a ton of great content on the site, all about the private lending industry. So this is part of a series of educational webinars that I've been hosting for the private lending industry. As many of you know, the private lending industry is growing very rapidly and it's changing very rapidly. So I want to make sure that everybody's educated about what is going on in the private lending industry. With these webinars, I bring in guests that I feel not only are knowledge experts in the industry, but that I have worked with firsthand. So Marcus is definitely one of those individuals. We were just chatting. I've known Marcus probably for almost 10 years. We had actually went to lunch for the first time. Well, what did we say? Almost 8 or 10 years ago, down at the Brigantine here in San Diego. And I think at the time I was peppering you with questions about the private lending industry. So thanks for always being there to answer my questions just about the industry and then also fund control. So as I mentioned,
been fun to watch you grow, Brock. It's been really fun to watch your company grow and expand and really be, super successful here in San Diego. So fun to watch.
I appreciate that. So, so Marcus is the president of Mesa Fund Control and Escrow. So he has actually 3 companies. 2 are a fund control company, and then also an escrow company who we've been able to work with a lot as well. What's nice about Marcus, though, is that he's actually a private lender himself. So when he speaks to us, he's actually speaking as a private lender himself. So he understands our side of the business, which is why I wanted to bring him on. So with no further ado, Marcus, thanks again. Why don't you tell everybody a little about yourself and what you do?
Yeah, thanks, Brock. Again, thanks for having us. For me, I appreciate it. As I said before, we love working with you guys. But my entry into really the lending business started 25 years ago. Kind of graduated with a finance degree and got into lending.
So everybody, he started when he was 5 years old.
Something about that age. I may have been 7, but I wish. But quickly gravitated to the private money space, and quite frankly, Brock, in the early 2000s, I was funding a few construction loans. Mm-hmm. And I knew very quickly on, I had some good advice to always use fund control when you're funding a construction loan, making sure that those funds are being managed appropriately and dispersed properly when you fund a construction loan. But the company I was using here in San Diego was La Mesa Lumber Fund Control, and they'd been around for 35 years, and we had developed a really good relationship with them. And in 2007, they decided to close their doors. They decided to shut down their fund control business. And I really saw it as an opportunity, having a lending background and being involved in lending. I saw the need for it. I saw that the level of service that was being provided with some of the competitors, because I'd had experience with them, wasn't great. Mm-hmm. So I really saw an opportunity to start a new business. And the woman who was running La Mesa Lumber Fund Control is actually now my business partner. I'd approached her to come on and help me start the business. That's great.
Okay.
Grace has a fabulous reputation in the industry, great service, and so she was really part and parcel to us being able to do it. But we opened the doors back then, and we've been growing ever since, and we get to work with a lot of private money lenders, a lot of finance companies, a lot of banks, SBA, you name it. Every type of lender out there is really kind of a client of ours. So, but we see a lot of different types of projects, and we see the good, the bad, and the ugly. So, so we have probably a portfolio right now of about 2,600 projects that we currently manage the disbursements for.
Wow.
All across the country, from as small as $20,000, small little flips up to, I think our largest project is about $350 million. So,
okay. So you see it all.
We do. We really do, Brock.
And what I find interesting is you not only see, the breadth of construction finance right now and the demand for it, but you actually see kind of the pulse and the health of the industry. I mean, things, again, we saw through COVID. I mean, things change rapidly, costs go up, markets change. So you see that on the fund control side, which I find is interesting.
Yeah, we get a bird's eye view is what I like to call it. It's a bird's eye view into what's exactly happening right now, before, the stuff that's happening right now is hitting the news 3 months from now. So that's kind of what we're
So you're already like, I knew that.
Yeah.
So real quick, what I like to do in these webinars is more of a discussion. So I have some questions for Marcus that I'm going to be asking, but I want everyone to get involved, ask questions. There's a Q&A chat button at the bottom for some of you. I think it's at the top for others. Use the Q&A chat session. As you ask questions, I'll bring those questions over to Marcus, and then we'll use them as discussion topics. So this is as important for you, Marcus and I, to talk to each other, but also get you as attendees involved as well. So Q&A right there in the corner, please start using it. So let's just start off with our first question. Marcus, what is fund control? What does it mean when you say fund control in a construction loan?
Yeah, really it's risk management, Brock. I mean, at the core level of what fund control does is it mitigates risk for lenders. I mean, bottom line, we are sort of the service provider for lenders, and we are handling that draw process. We're the front line for the lenders after the loan is funded, and we are the ones that are ultimately managing that process to disperse the funds, to do the inspections, to make sure that the work really has been performed on that project before dollars are dispersed to that contractor or to the subcontractors.
So these are construction loans.
Yes.
Lender financed the project, and you are now taking those, or not taking the funds, but ensuring that the work is being done, that borrower is stating that it's being done.
Yeah, and absolutely. And the key to it is having a good inspection correlating to each one of those draws. So as that,
and let's define, I'm sorry to cut you off. Let's define, what is a draw? When you say draw, what is it?
Great question.
Yeah.
So there's a lot of terms for it. It can be a pay application, a draw request, but effectively the borrowers or the contractor is requesting money for work that he has performed.
And that's important, that he has performed.
Not going to perform, has performed.
Yes.
Yeah. So you don't want to pay him in advance. You want to pay for only work that has been performed.
Yeah.
And that can be for not only his work, but also for his subcontractor's work. So if you have a GC and he's got 5 or 6 or 8 or 10 or 15 different subcontractors, you're paying not only the GC, but you might be paying the subcontractors or material suppliers, say for windows and doors or plumbing or so on and so forth. So
okay. So you're handling the fund control process, but I imagine it just doesn't happen right at close of the loan. Are you involved before the loan is closed in working with a private lender?
In some cases, yes. There's a lot of that goes into underwriting. As you know, Brock, you do a great job in your underwriting process on construction loans, but there's a lot that goes into underwriting a construction loan. It's not as simple as just writing a loan on a piece of property on a single family residence in La Mesa. It's much more complex than that. So one of the things that's really important is analyzing the project itself and analyzing the budget, looking at the contractor, looking at the overall scope of work. And so there are some things that we can do as a fund control company to help lenders analyze that project. And one of them is we provide 3 different levels of reports. They're called PCR reports, and they're a pre-construction review that goes, it takes a deep dive into the construction project itself. We look at the budget, we look at the contractor, we look at the contracts, we look at the overall scope of work itself. And then we come back with a detailed report for that lender. And again, this is all prior to the loan being funded, to say, does this project, is it gonna be successful? Is the budget sufficient to build this project that you want to build? Which is super important. You have to know that as a lender. You have to know that your budget is sufficient to complete that project.
Totally agree. And I think one of those, one of those items when you're looking at a construction budget, you're almost trusting the borrower that the budget is correct.
Right.
You don't know what material costs are at the moment. You don't know what the
Right.
lumber, you don't know what the concrete, windows,
Right.
flooring, all of these costs that go in there. Number one, are always moving.
Sure.
But being able to staying on top of that at that moment.
Right.
Because I mean, that's the biggest mistake just going into a construction project, I imagine, is just having a budget that's just not, it's not going to finish the project.
That's exactly right. So we use, within those reports, we use national data to pull construction costs across the board, and we'll use it in geographic regions to determine whether or not your project is consistent with what's happening in that particular region from a cost standpoint. So
now, what about the permitting process? So we talked about construction costs, and we're talking pre-close. Okay, so pre-close, what are we doing to make sure that the construction loan is set up to at least be successful? Are you working, or what would you say? Hey, you need to make sure that the appropriate permits are in place, that the approvals are in place, and whatnot.
Yeah. So part of the PCR report will be analyzing that permit if it's in place, and if it's been issued. There's certain things you want to look for. You do want to make sure that your project is fully permitted before you fund that construction loan. I mean, that would be my advice, 100%. So, we can help.
So you have your PCR review done, which in a prior life, I used to work for a private equity fund, and we were involved heavily in doing large residential development projects. And I remember, and this is when I was, just learning the business. This is back in 2001. So we would order a construction review report, and it was a pretty thick report. And the budgets on these were maybe 10 to 20 million in project costs.
Yeah.
So it's vital to have, I think, that PCR review done.
I completely agree. I mean, unless you have internal staff to analyze budgets and look at it closely, which most of the smaller private money companies that we do with don't. Even some of the larger ones don't have that staff. And even if it's not us, Brock, there's other companies out there that provide these reports. But I would highly recommend one.
Okay. So we get to close. Everything is looking good. Okay. What can a lender do at the time of close to, again, protect themselves from any issues during the construction process, during the loan process?
Yeah, prior to close, obviously, budgets are probably the biggest stumbling block for any lender. And consistently, what we see, and this is prior to funding, lenders that don't get a PCR report, that don't analyze their budget, that will fund a loan with a budget that is not detailed enough. One of the things that I stress to lenders all the time is the detail in the budget is so vitally important. And 9 times out of 10, when we get 7, 8, 10 months into a project and there seems to be a conflict and there's a problem, I can tell you, Brock, 90% of the time I can point back to the budget wasn't detailed enough, and it wasn't evaluated. And you might have a project that's a couple $1 million construction loan for a single family residence, and they only had 8 or 9 line items in a cost breakdown, and that's just not enough. There's not enough detail in there for you to be able to analyze where those dollars are going in that disbursement process. So
interesting. Yeah, I can see that. All right, so we're ready to fund, or actually we funded the loan. Normally, where does the money go?
Sure. So it depends on the lender. So, some lenders will fund, they'll fund the actual disbursements themselves. They'll actually cut the checks themselves mechanically from a payment standpoint. They'll cut the checks themselves to the contractors, the subcontractors. And what they're utilizing us for is just to collect the back end documentation and to handle the management of that contractor and all the subs, and making sure that we have an executed draw request, an executed lien waiver, and an executed invoice for every single payee on that draw request.
All right, so say that again, because this is important. What are those
Yes.
main items that you are getting on that draw request, or
Yeah.
when you approve a draw request?
Great question. So there's basically three, really four main documents that we're going to request, or we're going to require is a fully completed draw request, which
Okay.
and there's other terms for it. It can be referred to as a pay application or a draw request,
Okay.
depending on the language that lender is using or that contractor is using. But that spells out who's getting paid on that particular draw and what's getting paid for. So from there, we will look at the back end documentation. So if the draw request has 3 different payees, we're expecting to see 3 different invoices, 3 different lien waivers, and 3 different W-9s for each one of those payees that we're paying on this draw request. And that's the backup documentation that we're going to collect on every single draw.
Okay.
So if there's 10 payees, it's those same documents for each one of those payees. If it's 1, it's just going to be 1. So.
And are checks cut to each individual payee? When you say payee, to each individual payee, or is it a general contractor that you're paying and then it's up to him to pay out those subs?
Great question. 2 different ways to do it. So there are 2 different ways to do it. I personally recommend paying the GC and actually paying all of his material suppliers and all of his subcontractors. I like that because it creates a lot of transparency in the disbursement process, and it makes it very simple, and you're collecting all of your lien waivers. They're actually a
so hold on, let me get so paying each one individually.
Yes.
Okay.
I recommend that. I like that format.
Because you kind of get away from this idea that the general contractor takes the money and runs.
Right. Exactly.
Have you seen that before?
We've seen that in certain cases, but a good inspection will prevent that. A good inspection will make sure that you're only paying him for work that has been performed.
Okay.
Where you get into trouble is when lenders tell us, no, we don't need inspections. It's, for us, it's like, well, are you doing them yourself, or who's doing the inspections?
Yeah.
How are you monitoring that process? So back to the question of who we're going to disperse to. It's either going to be the contractor and all the subcontractors.
Okay.
Or it's going to be to the contractor directly. And if we're paying the contractor 100% of the proceeds on each draw request, then what we're going to require on the next draw is that he gives us unconditionals for each one of the line items that he was requesting money for.
Okay.
So in other words, he's going to give us an unconditional for his plumber.
And when you say, again, unconditional, release,
yeah, I should clarify. There's 2 different types of lien waivers that you're going to collect as you go through paying the vendors and the contractors and the subcontractors. There's an unconditional lien waiver or a conditional lien waiver, and they really function the same way. A conditional lien waiver, a contractor releases his lien rights subject to the payment. In other words, it's conditioned upon the payment, him receiving payment.
Yeah.
So in other words, he doesn't remove his lien rights until he receives payments from us. So he can give that lien waiver to us up front, then he gets paid, and therefore the endorsement of the check or him receiving the funds are the release of his lien rights.
So you have a contractor, you've hired a contractor, you've agreed to pay him an X dollar amount. He will record most likely some type of lien on the property. Something.
If he's not paid, yes.
Okay.
Yeah.
Okay. So right now, maybe an unrecorded lien, but by paying him, you are now eliminating the risk that he's going to come back and say, well, you should be eliminating the risk that he's going to come back and saying he's unpaid.
That's exactly right. So
and that's because you've got that lien waiver. You say, hey, look, I paid you.
That's exactly right. It's and we have the canceled check to back it up and proof that he's been paid and he's released his lien rights, essentially.
Because again, I think that's probably the most common issue between a borrower and a contractor is the fighting over payment.
Oh, for sure.
Or work.
Yes, that obviously. Yeah,
Okay.
the dispute that the owner says it hasn't been done, the contractor saying it's been done, and that's where the disputes arise. So
okay, so we talked about lien releases. You get the lien releases. You've now released the check to the contractor or the subs and the vendors.
Correct. Correct. Yep.
Okay. And now you're moving on, but now the other important aspect that you do is you're accounting for all of this. So I know exactly what's left in the budget. You're
Yes.
providing me, hey, Brock, here's the original budget. Here's what he has drawn, and here's what is left over. And everybody should be agreeing to that.
Absolutely. Yeah. So we track every penny of the budget. So one of the things we collect and as part of our software is the contractor's original budget. So that goes right into our system, gets loaded in. And as we go through the draws or go through this construction project, each time a draw is approved, a new budget is sent out to all the contractors, or the contractor, the owner, and the lender. So they can see exactly where the budget stands now. So
okay. Now we're doing a lot of lending in California, and many of you know I don't really do a lot of construction lending. I'm fascinated by it, and I like to hear. We do a lot of more when I say construction lending, we do a lot of fix and flip lending. So there's the budgets are much smaller. You're not building from ground up. You're taking an existing structure and renovating it. But there are rules in California. There's regulations around the draw process, especially if you're a private lender. Can you tell us a little about kind of, if you're a private lender, what you have to be aware of?
Yeah, it's really a licensing issue and how you're charging interest. And so think of it like this. I'll keep it pretty simple. If you are a private money lender and you're charging interest on the full amount from day one, you have to have that loan fully dispersed to a third party, and they have to be dispersing the funds for you. In other words, you have to disperse to a neutral third party, a fund control company that's a licensed escrow company. So the money is fully dispersed.
And that is because of really what occurred in 2008,
exactly
which is what, you have these hard money brokers that would put a construction loan together. Yes. They would agree to fund the loan, but at the end of the day, they actually didn't have all the money for the project. So the borrower's going along on the project, 2008 hits, nobody wants to invest anything anywhere.
That's right.
Broker is stuck saying, well, I don't have any more, I can't raise any more money for the project. And now the borrower's sitting on a dark project. He can't do anything.
Yes, that's exactly right. Because the money wasn't fully dispersed into a third party at the time that they funded that transaction. So yeah, that's exactly right, Brock.
And if you're investing in a private construction loan as a private lender, especially, if you're a fractionalized investor, you better have all that money in a third party. And I mean, obviously it's the law.
Yes.
But to protect yourself, because you don't want to be stuck in a position that who's ever brokering that loan can't raise the money to complete the project, because you're done. I mean, you as a lender.
Absolutely. You do not want to take back a broken construction project in a fractionalized note. So you don't want to take one back if you're the only lender in that note. So the goal is always to get to a completed project. So 100%.
So that actually brings up another kind of off subject, and that is Dutch interest versus non-Dutch interest. I know we didn't talk about this question, but I get it all the time. Hey, Brock, do you charge interest on the construction funds for a fix and flip? My answer is yes. I mean, I can't have money sitting aside not earning any interest. It's dead money not earning. I have to charge interest. For a fix and flip, though, it's not as bad, because we're talking a 3-month window or 5-month window gap of renovations. But on a construction loan, that's different. So can you tell me a little more about what is Dutch, what is non-Dutch, and why is that important?
Super simple. Think of Dutch interest. The interest is charged on the full loan amount from day one.
Now, I'm sorry to cut you off. Being that I am Dutch, I don't know if we can say that anymore, okay? VandenBerg is very Dutch.
Love it. So you're very familiar with it. You won't deviate from it. It's in your heritage. You got to do it. So
I guess. so keep going. I don't mean to.
Interest on the full amount from day one. You write $1 million loan, and on a construction loan, and even though you're only dispersing to the contractor $100,000 on the first draw, and that's all he's drawn, unfortunately the borrower's paying interest on the full amount from day one. So speed is of the essence. You want to make sure a contractor is going to move quickly and get that loan funded and go quick. So
on a Dutch interest loan, yes, there's a lot of incentive because they're getting charged on the full loan amount, even undisbursed funds. They're going to want to move quick.
And so interest as drawn is the exact opposite of that. The borrower is only paying interest on the amount that is drawn incrementally on future draws. So, so whatever that outstanding balance is, that's what they're paying interest on. So.
Okay. So questions are starting to come in. Thank you for posting these questions. This is a good one. How do you handle contractors who request an advance upfront retainer payment for construction costs? So I imagine, you know, if you got a pretty big project, I imagine the contractor wants to feel somewhat protected that they're going to get paid. So they want an upfront advance. How does that work?
Yeah, I typically advise lenders not, or owners not to advance contractors you know, any money. Now,
Okay.
most of the time we see it on smaller fix and flips, quite frankly, because you're dealing with more of a mom and pop, less sophisticated, smaller margin contractor who needs that capital to keep his crews out there, to keep going. So, you know, I understand the need for it in some of these smaller fix and flip type projects, but I typically would very much caution owners and lenders to limit that number and only advance small amount of dollars to a contractor that maybe you've had some experience with, you trust, you feel good with. I wouldn't say you should do that as a common practice.
So it's uncommon. So if a contractor comes back and is pushing this negotiation this way,
I would
say, hey, no, this is not okay.
I would question it, and I would say you need to think twice about using that contractor. So,
interesting. Okay.
Yep.
I think that's a good bullet point to note.
Yep.
Thank you. So another question, how do you handle change orders or modifications to the original construction plan? So we know things, you know, you start digging in the ground, you know, lumber changes, borrower decides, hey, I want to go with a little higher end product or change a floor plan. How do you deal with that?
Yeah, great question. Really good question.
Contractors love change orders, though.
They do love change orders. They make money on change orders. The first question I would say is you need to watch them very closely. You know, the second question is you want to make sure in any budget that you have contingency.
Okay.
What's contingency? Contingency is a line item within your budget that I recommend to be between 5 to 10% of your gross loan amounts. Excuse me, your gross construction budget.
Okay.
That is for contingencies, anything that may come up, things that are unforeseen in your construction project.
So 5-10% budget hard costs.
5 to 10%
okay.
of the hard costs. That's correct. And I'm going to tell you, during COVID, people blew through those numbers just because of cost of materials and everything else. But you
saw cost overruns, I imagine 30% and plus.
We did. We saw it. So I would highly recommend that first and foremost. But change orders are common. You know, you're going to have change orders in any construction project. You just need to make sure that you are not pulling money from future disbursements. In other words, if you are early in the construction project, let's say you're 20% in and you're at the foundation and you're just starting to come out of the ground with framing, you know, the last thing in the world you want to see is a guy saying, hey, I need to pull my my finished plumbing line item budget to supplement my my underground or my grading. You know, because what that tells you is that he's going to be short. You get 70 or 80% of this project, and all of a sudden he's going to be short in those line items.
Yeah.
So you just want
to. But Marcus, I have reduced my plumbing costs by over 75% on this project, which means I can actually take the money and move it to underground.
Because your brother-in-law is a plumber, right? Is that the?
That is a very. I mean, it's more common than not that somebody will say that. Yeah, say, oh, we're going to be able to shave off, you know, the roof costs are 50% less, so we can move it to underground.
Yeah, and if you're getting that kind of a comment, get a bid. Say, I want to see a copy of your bid from your sub.
Yeah.
You know, and if
good point. Yeah.
You know, show me the updated bid, verify the bid. If he's really got that kind of a change order and he's action to shave that much off of that line item, show me your subcontractor's bid and let me take a look at it. So,
side note, you may not have an answer to this, but if you're a contractor, what typically is the markup on cost? Is that how it's usually priced out, a markup on cost?
Yeah, it is. It is, or it's time and material, but generally
Okay.
it's just a markup on cost. And I
That's
would say
okay.
it's anywhere from 10 to 20%.
10 to 20%.
Depends on the size of the project.
And you
depends
get
on
a good contractor, it's worth every dime. That
Absolutely.
don't skimp out on trying to negotiate down a good contractor,
100%.
especially in today's market.
That's right. That's right. And generally you're going to have, a line item for profit and overhead. I mean, in that construction budget that he's going to draw from as that project gets
Okay.
moves through the process. I like to see that, honestly, because then you can see, I like when there's transparency in budgets. And, when you have a profit and overhead line item and he's drawing from that as the project gets completed. And then it's real simple. You're just following his profit and overhead based upon the percentage complete of the overall project.
Yeah.
So if the project slows down, then you're just going to cut him back on the disbursement for profit and overhead. He's not allowed to draw any more of that out.
Smart. So and I know that you call G&A is usually the term.
Yep.
Okay.
Yep.
Some overhead costs so that you see that. That's smart.
Yeah,
Okay.
it's called different things, but it's profit and overhead, or overhead expenses.
Okay. Another great question came in. Thanks again, everybody, for these great questions. Can you describe a situation where you had to address a dispute or disagreement related to fund disbursement? How was it resolved? So borrowers out there, he's disagreeing with a contractor and maybe about payment or about, nothing's happening.
Right.
You're kind of in the middle of it.
Yeah, generally happens. It generally comes back when we get an inspection report back, Brock. So so a draw request comes in, we process it, we get an inspector out there, and we determine that, of the 5 or 6 line items in the budget that he's drawing from, the framing is according to our inspector is only at 40%, and he's asking for 65% of the framing amount.
Okay.
So, and maybe that's $30,000 or $40,000, whatever the dollar figure is. We would bring that to the attention of the lender and say, we need to address this. Our recommendation would be to cut that line item back and not pay him up to 60% of the budget. We would basically pay him according to what's been finished on the project, and that might be 40%. So you'd cut that money back and just pay him less money until he catches up to that level.
Okay. Interesting.
So that's how we would address it. And sometimes there's frustration points there, for sure.
Okay. So we've closed the loan. Let's just say the funds are sitting in, now you guys have an escrow account. So you guys can technically, you can hold the funds yourselves.
We do. Yeah, we do. Yeah.
Okay.
Correct.
Loan draw comes in, you've got the paperwork. Okay. So you've approved the draw. You've told us, hey, we approve it. And then you release the funds to the contractor, and then he moves on to stage 2.
Correct.
Is that kind of the life cycle of how that process
works? Well, a little different. We're going to process it. We're going to cross all the T's and dot all the I's, do the inspection. We're going to send it off to the lender for their approval. They're actually going to review it. They actually approve it. If they want to talk to us about it, they want our recommendation, we're on the phone with lenders all the time, talking to them about kind of best practices, because they really lean on us for guidance.
Okay.
And so we provide that guidance and sort of say, well, here's what we would recommend.
Okay.
Especially when there's questions as to whether or not they should disperse money, maybe where work isn't quite at the same percentage of the budget.
Okay.
There's always going to be a little bit of
it's a give and take.
Subjectivity of what's been completed. It's construction, so it's it's opinion, but as long as it's within 3 to 5%, we're usually pretty okay with it. So,
and how long does this process take? So from the time that they submit a request, because that's something that I get all the time on a fix and flip loan. Hey, Brock, how quickly can you process this? Why can't you process it today? And you're like, I don't think. Come on, you got to give us a little time.
Totally. Our turn times are pretty good. We typically will process a draw request within 48 to 72 hours. 72 hours with an inspection. But largely, Brock, it depends on the sophistication of the contractor. So you can imagine we deal with every different type of contractor out there. Some of them are extremely sophisticated and give us really complete packages. Yeah. Others don't. Others give us piecemeal, and it's
the well-paid ones. The experienced ones give you a good package. You can tell.
True. So if it's packaged right and they give us lien waivers that are executed, and they're drawing money from line items where there's plenty of money in those line items, and they're giving us invoices that match what the line items show. 48 to 72 hours typically is how we're going to quickly.
Okay.
And we'll pay people with checks, wires, or ACH. We like to do ACH, so
Yeah.
It's a preferred method. So
Okay. All right. So we're going through the project. Borrower or borrower contractor calls us up, and there is a project budget overrun.
Yep.
How do we deal with this? What are best practices when it comes to cost overruns? Because there's always going to be a cost overrun, which is one of the reasons why I just am not a fan of doing construction loans all the time, because I just hate having those conversations.
Yeah, they're hard. They're hard conversations. The first thing you want to hopefully there's contingency in that construction budget. And quite frankly, the next person you're going to look to is going to be the owner. Say, look, you got a cost overrun that this contractor ran into for whatever reason. Maybe it's a remodel project, and he ran into something behind the walls. It was unforeseen. Yeah. And he's digging up the plumbing, and the main line needs to be replaced, and it's going to cost an extra 20 grand. And he didn't know it. You didn't know it. And there's no money in the budget for it. Well, the owner's got to pony up the money for it. So
well, this is what I say. I've always looked at it this way: is like, as soon as I fund that loan, we're in this project together. Oh, yeah. And if you can't squeeze blood out of a turnip, if he's got no more money to fund the deal, it's going to be up to you, the lender, to figure out a solution, because it does nobody any good if you can't keep the work going on a project.
That's exactly right. Right.
So as a lender, you better be prepared to pony up the cash to protect your original investment.
Yeah, and
because nobody wants to land in court.
100%. And that's a really good point. Reserves, I think, going back to underwriting.
Yeah,
reserves are really important in a construction loan. If you're going to lend to somebody, you need to know that they've got some reserves. They have some capacity. They have some ability to obtain additional funding sources, whether it's savings or checking or investment accounts or other property that they could tap into if they run into a problem, where they can get some capital. So more important.
Yeah. Yep. Okay. So project goes well, no budget overruns, no delays. Every package has gone to you is 100%. I mean, it's great. Yep. Right. So project is done. You've got the final draw. Money is sitting there for that final draw. What happens now? What kind of what closes out the whole thing?
Yeah. So what you would want to see is an occupancy certification or a completion certificate filed. And that starts the clock ticking on mechanics liens rights for anybody who's worked out there.
Okay.
If it's been a really clean project, we've collected all the lien waivers. We've collected all the invoices. So you shouldn't have any liens on that property. So at this point, we're going to close out the file. We'll do the last inspection. We'll do the last disbursement, and the project's complete. And we're going to close out our fund control. There's some final documents everybody's going to sign.
Okay.
And hopefully they're selling the property, or they're refinancing, or they're doing something. So
how involved are you on the title side? So date downs of title policies. You can buy lender policies from title companies that are specific to construction loans.
You can.
Can you tell us a little about that?
Yeah, most of the title companies today do not want to provide full coverage on the full loan amount day one.
Yeah.
So unlike a refinance or a project, title insurance for a property that's already been completed, they're issuing title insurance for your full loan amount. On a construction loan, they don't want to do that because there is ongoing risk of mechanics liens that they don't want to take on that risk up front at the time they close that transaction. So
okay, so you've got let's say $100,000 construction loan, but you disperse only $20,000 day one. Right. Technically, if you have a policy, a lender title policy, which is protecting your loan, it's only good for the $20,000.
That's right. They want to offer what's called incremental coverage.
Okay.
So incremental coverage.
That's right. Yep.
Incremental coverage. So what they want to do is offer coverage up to that first disbursement. And then what they want you to do is call them prior to the next disbursement, and you would do a date down.
Okay.
And all a date down is, Brock, is they're going to go back out to the county records to see if anything's been recorded against that property. And if nothing has, they'll issue the additional coverage.
Okay. So
So-
you've released 10,000 on that
Yep.
prior example, gone from
Yep.
20 to 30, and now you have a lender policy of 30,000.
That's right. And so lenders will ask us to do date downs for them, and we'll provide those for them. We'll reach out to the title
Okay.
company and ask them to provide a date down. A lot of lenders do it themselves
Okay.
internally. So just depends. It's pretty easy. Usually you'll get them within 48 hours from a title insurance company. One of the things we look for and we keep track of are preliminary notices.
Okay.
And preliminary notices are the precursor to a mechanics lien being filed against a property.
Okay.
So what a vendor or a subcontractor or a contractor or a material supplier has to file in order to perfect their lien rights is a preliminary notice. And it's a notice that comes to us, and generally it goes to the lender. Usually it goes to the owner as well and it's a notification that basically I'll give you an example from a concrete supplier, and they will send you a notification. Usually it comes certified mail to say, hey, we were out at your project, Brock, and we just poured $30,000 worth of concrete on your project.
Mhm.
And we have preliminary lien rights for that amount, and they're notifying you. And usually we get copies of those. And so long as they get paid and we have a copy of their invoice and they sign the
we're good. We're good.
Yeah, we're good. So all it is a pre-lien notice, but that's something to kind of keep in mind is you want to watch those preliminary notices to make sure that those are showing up on your next draw request to make sure those guys are getting paid.
Okay. So another question came in. I feel like this is more of a comment and maybe a certain situation occurred, and I don't know if there's a direct answer to this, but how to handle mid-construction owner and contractor decide to make a large change in the original plans and now request an additional $150,000 change to original budget.
So, I would tell you need to go.
Let's just answer it in the way of like, look, there's a material change to the project.
Yes.
What would be a best step one that a lender might want to start with? I always say no, but
or the answer is a question back to the owner. How are you going to fund that? I mean,
I like that response. At least mine just said no.
No problem. How do you want to fund it?
Thanks for letting me know on this.
No problem. And by the way, we'd like to hold those funds to make sure that change gets completed. So
okay, but let's say they do fund it, or you, the lender, say, okay, you know what, we'll go ahead and allow it. What would be the process of dealing with mechanics liens from that position in title insurance? And essentially it's almost a re-underwrite. You would almost have to go back and modify the loan and have the title company issue you a new policy, assuming you're lending the money, assuming that changes the loan, and then go back to you and do a whole modification on the scope of work and budget.
It's probably just an endorsement. It's probably as simple as I might not be using the right title term, but it's probably an endorsement or some sort of an addition to the actual policy that's written.
Okay.
And I'm not using the right language, so forgive me. But
I know you're not a title expert.
Yeah, I'm not a title expert, but I think it's common, Brock, and so I think it's easily done.
Okay, but you're going to get back involved. We're going to come back to you and say, hey, the budget's 150,000 more. Can you reevaluate the changes? Give us this stamp of approval, and now we're back at redoing the draw and budget schedule.
Yeah, and we're going to have those changes come into us and say, hey, can you add these different line items into this budget or increase these line items to this level for these new change orders? And you may want to get a copy of the new scope of work and explain exactly what those change orders are, because that's pretty significant.
Yeah. So, it's interesting. I've done, I don't know, almost 1,000 of these fix and flip projects. And every one of the conversations before I close this loan, I tell the borrower, give me your scope of work, give me your budget, I'll review it, we approve it, and I'll just go back and say, is there a chance that there's going to be any changes to this? Because we're not going to change it. Okay, this is it. This is you're not going to get, because I've had these conversations so often. I said, this is it. And that really has eliminated the back of, hey, I need to change this. And if they do, they're like, Brock, there's nothing I can do, but we have to change it. I'm sorry.
Sure.
So,
Well, I think you're doing.
I don't want scope creep. That's what I want. No scope creep.
Yeah, it's common. Budget creep, scope creep. Yeah,
scope creep was a result of why I have a new house at this point, right? It started with the kitchen, and then
your wife got what she wanted.
I got tricked on that one. Okay, so I guess the last question is, and if you don't mind, kind of going into costs. I mean, what is the cost of this, and who bears that cost?
Great question. So generally, the borrowers do. I mean,
Okay.
9 times out of 10, it's a borrower absorbed cost. Kind of no different than a title or an escrow cost. When you're doing a construction loan, your borrower, if they're experienced at all, they should understand that there's going to be a cost for fund control and inspections.
Okay.
And they should absolutely be the one bearing that cost. Quite frankly, I think it's an inexpensive cost, Brock. To give you an idea,
would agree. It's insurance.
It really is. It's peace of mind. It's insurance. It's knowing that the back end of the project, the documentation is all going to be collected, and somebody's doing it for you and managing that draw process. So it's absolutely necessary. Whether you're a big lender and you're doing it yourself, or if you're not and you want to outsource it to a third party, it has to be done. And so you just need to make sure that it's done properly and with best practices. So
I would recommend, I'm going to put my investor cap on. So I'm a trusted investor, a mortgage investor, and I'm looking at doing a construction loan. There is no way that I'm funding a construction loan without a third party service like yourself involved in doing the fund control. There's just no way.
You should not do it. You should not do it.
Yeah, that's a good point. So we're going to be wrapping up here. If anybody has any additional questions, please go ahead and throw them down there. Questions that have come in are great. Keep those questions going. Marcus, thank you very much for sharing all of this information. I learned a tremendous amount today. Tell us a little about, again, La Mesa Fund Control. What's its specialty? Where are you doing your services? How can people reach out to you, connect with you? And I imagine you enjoy having this conversation, so people can reach out to you anytime with questions.
We love construction. We really do. We're passionate about it. We have a national platform. We're in really probably 37 different states. So we can handle projects wherever you're lending.
Wow.
But call us as a resource. I mean, we're happy to chat with you. We will get on the phone with you prior to you funding a project. We'll help you set it up. We'll help you dial it in. I mean, we say all the time, your completed project is our success, and we really need that. We really want you to have success in the construction lending space. I think, I would tell you that probably only 20% of lenders, 15% of lenders out there fund construction loans. I think it's a great place to be if you can get comfortable and have the right mechanics in place. You can really do well and make good money as a private money lender in that space. And the other thing that it does create, Brock, it creates repeat customers.
Yeah.
You do a really good job for your borrowers and your contractors that you're working with. They'll come back to you over and over and over again.
Yeah.
And that is valuable from a private money lending standpoint. So
I would agree with you as a fund manager. Being in this business, repeat business is crucial if you want to be successful.
Yep.
And I agree with you, because getting a construction loan for a borrower is very tough. Even if you do find a lender that'll do it, just the first time introduction, going through the whole dog and pony, dance of, hey, are you a good borrower? Are you a good lender? As soon as you get that out of the way, you can, these borrowers can do very well finding a good lender, and a lender can do very well finding the right borrower.
Absolutely right. Absolutely.
I agree with you. So Marcus, how can people find you?
We're online. LMFCE is our website. They can email us. Marcus at LMFCE. We're on the web. We're located in La Mesa, California. So call us.
Sounds great. I'll go ahead and shoot an email out thanking everybody as well. And I'll go ahead and put Marcus's contact information. Again, I've known Marcus for 10 years. He's been in the industry. He's very knowledgeable about fund control. And being that he also does his own private money loans, it's like he can see it from your perspective. So Marcus, thanks very much for jumping on with us today.
Thanks for having us, Brock. Appreciate it. Yeah.
All right. Thanks, everybody. Again, I'm going to go ahead and post this webinar on our YouTube site. We post a ton of great content again on YouTube about the private lending industry. We've got some great guests coming up here in the future. So I'll go ahead and shoot out some of the dates and names that we're going to be bringing some other great guests like Marcus on to talk everything private money. So thanks, Marcus. Thanks, everybody. You have a good afternoon.